Simon Rubinsohn. Really good to see you, Simon. Just tell me how things have changed from July.
Well, what we're seeing is a fairly flat picture as regards activity, so transactions trend is still pretty flat, but as you said in the introduction, I think there's a little bit more pessimism coming through on the price side.
It's interesting what we had that ICB banking report yesterday. Can I get your thoughts on that? Because there's a lot of fear that maybe, and sort of talk, that actually would strangle credit even more. It's difficult enough for some people to get those mortgages, to get those loans. What's your reaction to the report?
Well, I think that the reasons for a report are understandable. The impact from the report clearly. We're at an early stage in the process. The risk is that the costs of banking go up and that there will be spin-off effects on lending, particularly mortgage lending. But I would add that our latest report, where we specifically asked our members what was the key factor inhibiting demand, and while availability of mortgages ranked highly, actually the general economic situation was the primary factor they were pointing to.
And how much is there out there a sense that, you know what, house prices are going to fall even further, therefore I'm going to delay putting my house on the market or looking for a new property?
Well, certainly we found around half of our members felt that fear of further falls in house prices was a major factor in discouraging new buyers. Now, the London market is very different. It was interesting hearing your report about the city and potential changes in bonuses and job cuts, because we're still getting a very strong sense from London that the market there is very different. It's still very positive. And in fact, the key factor inhibiting demand in London, believe it or not, is lack of stock, not the economic situation, not lack of mortgage availability.
Now, some people, when you look at the economic climate, say to us, you know what, we look as though we're staring into a big abyss, especially if Greece defaults, there's going to be chaos. You must be very concerned for the next 6 to 12 months, right?
I think there are clearly huge risks, but the London market for the time being seems very different. The rest of the country is already beginning to reflect some of these underlying economic tensions. The real question is whether London can continue to shrug off these fears, and clearly, as the pressure on the financial service industry grows and worries clearly about what's happening in Greece intensify, then the risk that London will be caught up in this turmoil intensifies.
Simon Rubinsohn, thank you very much indeed.
Thank you
for joining us on Bloomberg today.